Hello everyone, this is the pre-market report video for today 16th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know, last Friday Nifty closed over 200 points positive, but why? I personally think it's due to the Sensex expiry, which is a classic example of how our market can be manipulated. Let's go back a bit. Not the last Thursday, but before that, 5th December, it was the first Nifty expiry without any other NSE index weekly expiry. That Thursday was crazy and very volatile. So to some extent, most people expected a similar volatile expiry last Thursday, but unlike December 5th, this time it was a very quiet expiry. Instead, those who manipulate the market decided to do it on Friday. You might ask how I'm telling this. Let me explain. If needed, please pause and have a look. This is the trade volume of the BSE derivative market last Thursday, which we can call Sensex option market. As we see here, the trade volume was only 70,000 long contracts and 80,000 short contracts, in total roughly 1.5 lakh contracts. This is the usual trading range in the BSE derivative market, as I have been keeping tab on it from November month. Now, please pause the video and guess how much that 1.5 lakh option trade volume might increase on Friday. To be honest, when I checked, I was blown away that 1.5 lakh contract trade volume increased to over 100 crore derivative contract trade volume in a single day. In fact, the trade volume on NSE, which is mostly Nifty and Bank Nifty, was only 20 crore contracts. Some might argue it was Sensex expiry, not Nifty expiry, so only this much volume on Sensex. But on the last Thursday during Nifty expiry, it was only 50 crore contract trade volume. Even on one of the most volatile days, December 5th, it was 80 crore contract trade volume. All those NSE Nifty derivative trade volume records were tumbled by Sensex last Friday. And in that 100 crore contract, 70 crore contracts were done by just proprietary traders, which is about only around 100 professional investors. In fact, last Friday, the entire global market was down. On the previous night, US market was down due to high wholesale inflation, and the Chinese market was down over 2% because of bad loan data. Despite all that, whereas in our market, it was just Sensex alone going crazy up, which indirectly made Nifty and Bank Nifty run positive. Out of 30 Sensex stocks, only 3 were down, the rest 27 were up significantly. On the other hand, in the Nifty index, 10 stocks closed negative. Even if you see the overall listed stocks, only 45% closed positive, while the remaining over 50% closed negative. So my conclusion is the positive run that happened last Friday was purely driven by proprietary traders because of the Sensex expiry. Hence, those who trading options, please be cautious. At the end of Friday, BSE derivatives had only 20,000 open interest, but during the trading time, it's increasing like crazy. Anyway, looking at the NSE volume analysis, retail traders stance is neutral with a positive bias, while FIA stance is neutral with a negative bias. On the other hand, proprietary traders wants the market to go up. Just for info, I'm considering squaring off my 25,000 June month open position with a loss, possibly before the close of Wednesday. This is because on Wednesday night, Fed will announce its interest rate decision. At present, according to the Fed monitoring tool, over 95% chance it's predicting that Fed will cut the interest rate by 25 basis points. I might speculate here, if the Fed doesn't cut the interest rate on Wednesday night, the US market might fall drastically, and that might influence the global momentum negative. Anyway, due to the upcoming Fed FOMC meeting, even on last Friday night, US market started to pause. Dow Jones decreased marginally by 0.2%, S&P 500 closed absolutely flat with no change, and the Nasdaq was up marginally by 0.12%. In case of VIX, it's still just below 14. Then about oil, at the time of this video, Brent crude trading near $74.5 US per barrel and WTI crude trading just below $71 US per barrel. Thus, in line with that negative momentum, GIFT Nifty on Saturday morning dropped around 75 points and closed at 24,777. Currently, the premium between the spot Nifty and GIFT Nifty doesn't make much sense to me. Hence, I think for now, it's indicating roughly 50 to 100 points gap down opening. Regarding Indian ADR as it is all the major ADR closed positive. However, if you calculate the arbitrage, all indicating a significant negative difference, especially banks which have an arbitrage of nearly negative 2%. This negativity in banks might be due to the bi-weekly bank loan and deposit growth report. Last Friday at 5:30 p.m. RBI released it, and as per the report, deposit growth increased by 10.6% and loan growth increased by 10.7%. Both numbers were lower compared to the previous bi-weekly growth rate. Hence, I personally consider this negative since 10% credit growth is nothing for Indian banks. In summary, global momentum was not very positive. Also, GIFT Nifty and Indian ADR all looking negative and indicating a gap down opening of 50 to 100 points. Regarding the things to look out, before our market opening, several China economy related macro such as unemployment rate, retail sales and industrial production growth rate are due. And during our market time, India's wholesale inflation and Europe's PMI data are scheduled for release. Then later in the night, US PMI data are some of the items we need to keep an eye out today. Just for info, before moving to the next topic, after 2 days of selling, FIIs turned as net buyers. They net bought for 2,300 crore rupees. On the other hand, DIs net sold for 730 crore rupees. Coming to technical, last Friday Nifty opened 50 points gap down and extended its correction to 24,180 in the morning trade. Even dropped below all the key moving average except the 200-day exponential moving average. However, the trend reversed in the afternoon, then rallied and closed above 24,700 mark. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with a lower shadow, indicating strong buying interest at lower level after taking support around mid-range of the Bollinger Band intraday. Additionally, Nifty stayed above all key moving averages on both daily and weekly chart, with RSI and MACD momentum indicators showing an upward bias, which is a positive sign. On the lower end, Nifty found support around the neckline of the inverse head and shoulder pattern, completing a retest before rallying towards the higher level. Furthermore, last Friday's low also coincided with the 38.2% retracement level of the previous rally. So going forward, I think the trend is likely to continue with the potential to reach 25,000 and higher in the short term. On the lower end, support is at 24,550. Then in case of Bank Nifty, it opened 100 points gap down and showed a similar price action like Nifty, then closed at around 53,580. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a bullish candlestick pattern with a long lower shadow, indicating buying interest at lower level. 53,000 and 52,800 will be the key support zone, while 54,000 to 54,300 could act as the important resistance. Regarding the options data, the maximum call option open was at 25,000 strike, followed by 25,500 and 25,100, with maximum new call option writing at 25,100 strike, followed by 24,800 and 25,000. On the put side, the maximum open was at 24,500 strike, followed by 24,400 and 24,700, with maximum new put option writing at 24,500 strike, followed by 24,400 and 24,700. Thus, from options data, it indicates that 25,000 level is the resistance, while support is at 24,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.